Hi everyone, welcome back to GST Park. In this episode, we will be revising the tax invoice, credit and debit notes. So basically, tax invoice, credit and debit notes are one amongst the important documents from the taxpayers, and it will be considered as the proof of any of the supplies which has happened in the business. If you don't maintain this tax invoice, credit note, debit note, or if you don't provide this tax invoice, credit note and debit note in the manner which is prescribed, no, it will not be considered as valid, and it has a very huge consequence in the on the taxpayer. For that purpose, tax invoice, credit and debit note are important document which are given by the supplier. See, any supplier for that matter, it can be the composition dealer, it can be the regular scheme guy, or it can be unregistered persons. All these three guys, they have to give something to the recipient or something to the buyer which says that they have the ownership of this goods. So that tax invoice, there is no specific format, but contents of the tax invoice are given. So that we are going to discuss. And the revision, basically revision people, what you have to do, plug in your earphone and go on listening to this. This will definitely help you out for your examination. So directly going to the definitions, may not so important one, nothing is very important here, we have discussed in the classroom. Now listen, credit note means the document issued by the registered person under subsection 1 of 34. And what is debit note? Subsection 3 of 34. Any document which are issued under subsection 1 and subsection 3, no? So that is credit note and debit note respectively. What is continuous supply of goods? Continuous supply of goods is nothing but the supply of goods which is provided or agreed to be provided continuously on recurrent basis, whether whether on wire, cable or pipelines. So this is continuous supply of goods. What is continuous supply of service, sir? 3 months ka agreement should be there. At least 3 months ka agreement should be there. Period exceeding 3 months. So that means more than 3 months ka agreement has to be there. And later, what is exempt supply? That we know, tax invoice, where the tax is mentioned separately. Tax is referred. So means the tax invoice referred in 31. Now what is the meaning of quarter? It is always fixed: April, May, June, July, August, September, October, November, December, January, February, March. And return means anything which are the prescribed, return prescribed or otherwise required to be furnished under this act, that is called as return. Now we are going to the section number 31, that is tax invoice. Section number 31 subsection 1. What is section number 31 subsection 1? In case of goods, a registered person supplying taxable goods. Now what is the last date to give the invoice? If there is movement of the goods involved, then removal of the goods. If the movement of the goods is not involved, sir, then delivery or making it available to the person. So that is the last date to give the invoice, last date to issue the invoice. Next one, section number 31 subsection 2, in case of services, a registered person supplying taxable services. No, in that case, what is the last date to give the invoice, sir? So last date to give the invoice is for generally those service providers, no, on or before the provision of service or within 30 days from the provision of service. But in other cases, special cases such as in case of banking company, NBFC, insurance company, in all these cases, no, they are required to give the invoices within 45 days. So 45 days, or the provided government may, on the recommendation of the council, specify the category of services supplier, category of service or supplies in respect of which tax invoice shall be issued within such time as may be prescribed, subject to such conditions. So that is given here. Next one, section number 31 subsection 3. What it says? Section number 31 subsection 3, special provisions. Remember, RCB versus RR and SP. So what is RCB? R, sir, revised tax invoice. Remember, you have to provide the revised tax invoice. If a person has applied after becoming liable within 30 days, if he has applied for the registration, no, then he will get the registration certificate. That registration certificate is effective from the date of crossing the turnover limit or becoming the liable. And in that case, he can provide revised tax invoice from the date of becoming liable till the date of grant of registration certificate. That he can provide for the supplies which he has done from the date of becoming liable till the date of registration certificate within 1 month, from the date of from the date of issuance of the certificate of registration. This is about revised tax invoice. Next one, C, consolidated tax invoice. When you can give the consolidated tax invoice? If the value of supply is less than 200, not less than or equal to, less than 200 rupees. In that case, you can give the consolidated tax invoice to the unregistered person. Remember, if you are giving it to the registered person, you cannot give the consolidated tax invoice. If you are giving to the registered person, always remember you have to give separate tax invoice even if the value is less than 200. A registered person may not issue the tax invoice if the value of the goods service is less than, subject to such condition in such manner as may be prescribed. But remember, if you are giving it to the registered person, definitely you are not supposed to give the consolidated tax invoice. Next one, a registered person supplying exempted goods, no, in that case he will not give the tax invoice, then he will give the bill of supply. Where he can give the bill of supply? RCB mein B stands for bill of supply. In which are the situation where bill of supply is given? Unregistered person supplying goods, bill of supply. Registered person supplying exempted, exclusively exempted goods, then bill of supply. In case composition dealer, he is giving bill of supply. In case of registered person, he is supplying in one bill, exempted goods is also there, and at the same time the other goods such as taxable goods is also there, then he cannot give tax invoice, he cannot give a bill of supply, he has to give tax invoice come bill of supply. So that will be provided. Even in case of bill of supply, if the value is less than 200, then he can give, he is not required to give the separate bill of supply, he can consolidate it. So next one, RCV versus RR mein receipt voucher. When we will give the receipt voucher? Whenever the customer pays the advance, no, then we can give the receipt voucher. Why receipt voucher is required? Just for as a proof that we have received the advance, and we know that in time of supply, we will discuss that in time of supply mein, in case of goods on receipt of the advance tax, if you don't give the tax invoice, then GST is not there, but still for accounting purpose we have to give the receipt voucher. Next one is, whenever you on accepting the advance, if you don't make the supply, on advance, accepting the advance, then you have to adjust it or you have to refund that. In that case, refund voucher is given. Later, S for self invoice. What is self invoice? In case of, if I purchase it from the unregistered person or registered person itself, if I purchase any goods or services which are liable under RCM from any person, then he will not provide me the invoice. If he don't provide me the invoice, then I can issue invoice on myself. Why? Because I have to pay under RCM. To take ITC, I should have the invoice. For that purpose, I will issue invoice on myself. And next one is payment voucher. It is not enough that if I issue invoice to myself, there should be some proof that the other person has received the money. Otherwise, being a intelligent person, what I'll do, I go on issuing the invoice to myself. So I go on giving the invoice to myself, being said that it is under RCM. It is under RCM. If the goods are under RCM, I go on giving invoice to myself even if I am a thief. So smuggled goods as well. For that purpose, government says that to whom you have paid, no, to that person you have to give the payment voucher. In that payment voucher, you have to take the signature and some initials or any address of that person has to be given. This is payment voucher. So these are the section number 31 subsection 3. There are some conditions which are given in case of consolidated tax invoice, sir. Remember about consolidated tax invoice or consolidated revised tax invoice. In that case, you cannot give consolidated tax invoice to registered person, maybe interstate or intrastate. You cannot give consolidated tax invoice to the registered person. In case of unregistered person, sir, intrastate I can give consolidated tax invoice. But in case of interstate, I cannot give in consolidated tax invoice where the value of supply is more than or equal to 2.5 lakhs. So if the value is more than 2.5 lakhs, not equal to, more than 2.5 lakhs, then you cannot give the consolidated tax invoice to such unregistered person. For the purpose of accounting, you have to give the separate tax invoice per recipient. You have to give the separate tax invoice. This is what you have to keep in mind. Later, we discussed there was section number 31, subsection 4. In case of continuous supply of the goods, in case of continuous supply of goods, sir, what is the time of supply? It is during continuous supply of goods. Example, electricity, gas, or anything by the pipeline, anything that you get, no. In that case, usually the supplier will give you the statement. It is the date of statement. On or before the date of statement. Sir, if there is no statement, then on or before the date of payment. So that invoice has to be issued. That is in case of continuous supply of goods. Section number 31 subsection 5 is about continuous supply of service. In case of continuous supply of service, if due date is ascertainable, then due date on or before due date. If due date is not ascertainable, then on or before the payment. If the payment is linked to the invoice, event, completion of the event, then on or before the completion of the event, you have to give the invoice. So section number 31 subsection 6, sir, in case of provision of service, the service has been stopped in between before the cessation of the service for whatever the supply of service has been given, no, for that service you have to give the invoice. That is given in section number 31 subsection 6. Section number 31 subsection 7 is about sale on approval basis. In case of sale on approval basis, the approval date or 6 months, whichever is earlier, before that you have to, on or before that date, whichever is earlier date, you have to give the invoice. That is about section number 31 subsection 7. So here we are done with section number 31, the invoices. Later there are some important points which we have to discuss. That is in this point. In this point, they especially in this table, no, 9th page, they have told that in case of supply of the goods, no, there is summary which is provided. So removal of the goods is there on or before removal of the goods or making it available if there is no movement is involved. But in case of service, 30 days and 45 days. 45 days to the insurer, banking company, financial institution, NBFC, non-banking financial institutions also. If you remember the bro case may issue the invoice before or at the time of such supplier record the same in the books of accounts or before the expiry of the quarter during which the supply was made. In which case, sir, in case of insurance or banking company or financial institution involved, including NBFC or telecom operator or any other class of suppliers of services, as may be notified by the government, making taxable suppliers between the distinct person as specified in section number 25. See, these guys know NBFC, banking company or the telecom company, insurance company, if they are giving services to their bros in the sense distinct person, then they can give the invoice before or at the time of supplier records in his books of accounts or before the expiry of the quarter during which the supply was made. If the supply was made in 5th of February, then January, February, March, that is the quarter, no, by the end of the quarter you have to write it, or the date of record by the supplier, whichever is earlier. So that on that date you have to make the entry. Next, in page number 11 you can see that what are the particulars of the tax invoice. Just keep this in mind. What are the particulars? Name should be there, consecutive serial number should be there in the tax invoice, multiple series of the date of issue. If the recipient is registered, then name, address, GST must and should compulsory. If the recipient is unregistered, then think that if the value is 50,000 or more, then you have to give the name, address of the recipient, address of delivery, along with the name of the state and its code. That is required. If less than 50,000, if the value is less than 50,000, unregistered recipient may still request to put all this in the in that invoice. So that is what required. And later, in case of OIDR services, where any taxable services is supplied by or through an electronic commerce operator, then to a recipient who is unregistered, irrespective of the value of such supply, a tax invoice issued by the registered person shall contain the name, address, everything, PIN code of the recipient. Recipient ka record should be there by OIDAR, must and should. HSN code will be there, description, quantity, the total value, taxable value, rate of tax. These should be there in the tax invoice, including amount of any tax charge in respect of the taxable goods or services, place of supply, address of delivery, and whether the tax is payable on reverse charge basis or not, and HSN code will be there. Quick response code, QR code will also be there for making the payment. Having embedded, which has the invoice reference number and invoice, E-invoice has been issued. Later, HSN code ka case mein there is one important note on HSN code, that is here. If the value of the turnover, annual turnover of the person, aggregate annual turnover of the person in the preceding financial is less than or equal to 5 crores, then business to business supply ke liye at least 4 HSN code, 4 digits should be there. But B2C ke liye it is optional, 4 or it is optional. But if your turnover is greater than 5 crores, then B2B supply ke liye and B2C supply, in all the cases at least 6 digits should be there. How many digits are there in HSN code? 8 digits will be there. And one more, manner of issuing the invoice, very important one, manner of issuing the invoice. In case of goods, triplicate. In case of service, it is duplicate. Triplicate in case of goods, one is for supplier, one is for original for recipient, duplicate is for transporter, triplicate is for supplier. See, original for recipient, duplicate for transporter, triplicate is for supplier. I hope this is clear. But in case of services, there is no transporter. That's why original for recipient, duplicate for supplier. So this is one more important point which we had to discuss. And uske baad we will discuss about e-invoicing. Remember e-invoicing, if your turnover is more than or equal to 10 crore in the preceding financial year starting from 2018 onwards. So in any year, if your turnover is more than 10 crores, then you have to go for e-invoicing. But amendment says that it is not 10 crores now, it is 5 crores. Remember, it is 5 crores, not 10 crores. So recent amendment it is given that it is not 10 crores, it is 5 crores. E-invoicing is required if your turnover is more than 5 crores. Earlier it was 500 crore, 2017, 18, 19 somewhere, whenever it was introduced, no, then it was 500 crores. Later gradually, progressively they reduced it and now it is 5 crores. Remember that it is 5 crores here. And other important points are why in e-invoicing, sir? It is accuracy and reconciliation purpose. Reconciliation, e-invoicing and GSTR 1, it will not differ. Cost reduction, again and again you don't have to put that, and there is no other employee is required. And paper elimination, earlier you had you were requiring that paper. Nowadays e-invoicing, easily you can send it to the person. Central control, internal control easily. See that e-invoicing may one amount and GSTR 1 may another amount. No, early payment will also be there. Why? Because you remember in case otherwise ITC is not available, within 180 days you have to pay. For that ITC, if you pay within 180 days, then ITC is available, otherwise you have to reverse. For that purpose, better relationship will be there because there is fully transparency. This is the advantages of e-invoicing. And after this 10 crore has been reduced to 5 crores now. It is 5 crores. Uske baad, exemption from e-invoicing, who are not required to entities are exempt from mandatory requirement of e-invoicing. They are not required to take e-invoice. Special economic zone units, not special economic zone units. Developer, see, it is not applicable to developer, you have to take e-invoicing, but special economic zone units not required. Insurance and banking company not required. GTA supplying services in relation to transportation of the goods by roads, by air required. Next one, supplier of passenger transportation services not required to give the e-invoicing. Person supplying services by way of admission to the exhibition of cinematographic films, e-invoicing is not required because it is very difficult to take the e-invoicing. So government department, not difficult one, it will take time. Urgently, if film is required, you cannot give. Even in case of conductor when he is taking the ticket, no, if it is e-invoicing, it will be a big paper. Why? Because QR code, all these things should be there, and there this is not 5 crores, it is 10 crores, it is 5 crores now. So these are some of the, and declaration is required to be given. So these are the things which is related to e-invoicing. So how will you generate e-invoicing, that we have discussed in the classroom, not so important one, and QR code is also there. So that was about section number 31. Now we will discuss about section number 32. What is section number 32? Prohibition on section number 32. Yeah, so all these things that we discussed. Section number 32 is about prohibition on collecting the GST. Remember, if you are not registered person, you are not supposed to collect the GST. And second one, you have to collect the GST as per the provisions, which are given in section number 32 says that, see, section number 32 is given after this. Even then, section number 32 says that if you are not registered, you are not supposed to collect the GST, and if you are, in case if you are registered, then you cannot collect more than the provision. So as per the provision you have to collect, you cannot collect more. So remember this is also section number 32. And section number 33 says that you have to show the tax invoice separately, tax amount separately. Section number 34 says that in case of credit note and debit note. You have to give the credit note and you have to give the debit note. When you have to give the credit note, whenever you have to pay to the other person, you have charged more, you have charged more tax, you have charged more value, or you have sales return has happened. In all these cases, you have to give the credit note. You have to give the credit note. And section number 34 subsection 2 is that what is the last date to give the credit note? That is 30th day of November following the date of November following the year of supply. So that date or date of filing the annual return, actual date of filing the annual return, whichever is earlier. And section number 34 subsection 3 is talking about debit note. It is exact opposite of credit note. And section number 34 subsection 4 says that what is the last date to issue the what is the last date to issue the debit note? It is, so the last date to record the debit note in your GSTR. So the returns, that is last date is next month, the month of giving the debit note, next month may you have to show. Even in credit note you can show it in the next month, or last date is 30th of November, or actual date of filing the annual return, whichever is earlier. This is about tax invoice chapter, people, and we will discuss about other things in the next class. Next episode may we will discuss about some other revision lectures. Until then, people, keep studying, keep growing. Now we all hail GST. Bye.